Hello friends, this is Professor Rakesh Mishra. By qualification I am a chartered accountant. I teach CA final law subject since last more than 15 years. Today I am going to discuss the RTP of paper 4 corporate and economic law applicable for November 23. But before starting with this, there are something very important things I have to tell you which you have to listen very carefully, then only we will start with the discussion. Along with this November 23 RTP, you have to also see the May 23 RTP recordings. So this May 23 RTP I have already uploaded on JKC channel. So after once you will complete with the amendments of November 23 RTP, please go and watch the May 23 RTP lectures also. So these taken together your entire amendment will get covered. Number one. Number two, which amendments I am going to discuss in this November 23 RTP. So registered valuer amendment chapter, from this chapter there is an amendment, then a amendment from a foreign company chapter, and then there is an amendment from a PMLA chapter. From these three chapters amendment are there which I am going to cover in November 23 RTP. After that all other amendments which they have given in this RTP, that is November 23 RTP, is same as they have already given in May 23 RTP, and all that amendments I have already recorded and uploaded long back on JKC channel, so you can view those lectures after this. So it is the first part of the amendment which I am going to discuss. Now the second part in which I am going to discuss is they have given lot of MCQs plus they have given lot of questions. So I am going to discuss that also. So there will be a two type of discussion in this, the amendment of these three chapters, and second is the question answers discussion. The prime focus will be for the question answers discussion and MCQ, because the amendments which I am going to discuss is a very minor amendment. In fact, I will tell you one thing, in the name of amendment there were a lot of drafting errors was there earlier. So they have just corrected those drafting errors, otherwise there is no major amendment. One amendment is there in PMLA which I can say somewhat a very good amendment, but apart from that the amendment which they have given in registered valuer chapter and the amendment which they have given in a foreign company chapter, those amendments are a very minor and a very small amendment. So without wasting any time, I will start with the discussions of the amendment. First amendment I am going to discuss is from the registered valuer chapter. See what is the amendment. What I will do, I will just show you those amendments from the chapter itself. It will become very easy for you to correlate those amendments. So under a registered valuer chapter, if you will see, there is a rule 3. There is a rule 3 eligibility criteria for registered valuer. Under that rule 3 there is a sub rule 2. What is sub rule 2? I will first explain you that in a brief, and then I will tell you what is the amendment. See, if you want to appoint any partnership firm or if you want to appoint any company as your registered valuer, so the condition is that you can appoint any partnership firm and company as a registered valuer only when their partner and directors are not disqualified. Fine, are not disqualified. So that is a provision which we have already discussed in classroom also. So let's say, just for an example I am telling you, let's say there is a partnership firm ABC and Associate, and now I want to appoint ABC and Associate as a registered valuer. So all the partners of ABC and Associate should not be disqualified, then only ABC and Associate can be appointed as a registered valuer. Now the problem is, earlier there was a drafting mistake in the law. What they have written, no, first the reading line should used to start from no, and then they have written are not ineligible. So if you read it very carefully, the reading used to become like this, that the partner should be disqualified. If you read it carefully, the meaning used to come like that. But along with me, anyone in this world, if they will teach you, they will obviously not going to give you this explanation. So whether you have studied under me or some other professor, I'm sure you must have studied that no partner should be disqualified or no director should be disqualified of a partnership firm or a company. Then only such partnership firm or company can become registered valuer. But there was a drafting mistake, so they have to correct it. Now they have just corrected it and they have just make it sensible. They have just deleted the word ineligible and they have written the word eligible. So what you can do, you can make the changes in the textbook, in your textbook, in JKC textbook, but as far as understanding is concerned, it is same as earlier. Finally, again I will repeat it one more time. What is the final meaning? That any partnership firm or company want to become registered valuer, all their partners and all the directors of the company should not be disqualified. Then only firm and company can become registered valuer. So that is the first amendment I have already discussed. What is the second amendment? Again, the second amendment is more like a drafting error which they have corrected. Earlier in the classroom, what we have studied, that which valuation standard they should follow. So it was written international accepted valuation standard A, and B, valuation standard adopted by registered valuer organization. But in between they have neither written and or nor written or. So there was neither and or. There was nothing was written in between. So there was a misunderstanding. There was a confusion. There was no confusion technically, but from a legal point of view, I am saying there was a confusion that it should be and or. So obviously they have written it here or. As far as my students are concerned in classroom, also I have many a time I have explained you this. Again, after amendment also same thing I am going to repeat. And what is that? A valuer shall make valuation as per either the valuation standards accepted internationally or the valuation standards adopted by the registered valuer organization. So in your book also you can just add the word or. Earlier there was nothing written in between. Now they have added the word or in between. That's it. So these are two amendments from the registered valuer chapter. One more new rule they have inserted in registered valuer chapter, which is there in your RTP page number 6. You can come to RTP. By the way, you can just pause the video and you can just write whatever I have written in the textbook. So you can do that much. I hope you have written this. And you please do the same thing here also. Fine. Now, please come to page number 6 of your RTP. Now in this, they have inserted a new rule 7A. Now under this new rule 7A, what they are saying, see, if there is any registered valuer, obviously there must be directors in that, there must be partners in that. So those partners, those directors of the registered valuer, now lot of information of such directors and partners is already supplied to the authority. Who is authority over here? IBBI. So now let's say there is a XYZ, an associate, it is a registered valuer and the director is, let's say, Mr. Rakesh or Mr. Ghanshyam. So you will provide all the personal details of Mr. Rakesh and Mr. Ghanshyam. So now there is a possibility that there is some changes in the personal details of the director, let's say of Mr. Rakesh or Mr. Ghanshyam. So if there is any changes in that personal detail, you have to inform it to the authority, that is IBBI. So let's say if I get married, you have to supply my wife's information. Let's say if there is any other detail, any other changes in the Ghanshyam's personal details, you have to supply that information to IBBI. So earlier there was no any rule for that. Now they have inserted rule 7A regarding that. Under rule 7A there is one more thing they have inserted, that if in a registered valuer which is a partnership firm or let's say it is a company, and if there is any changes in the partnership agreement or memorandum of association, so if there is any changes in the partnership agreement or the memorandum of association, then they have to provide the details of that partnership firm or memorandum of means the changes of those partnership firm or memorandum of association to the authority, and for that obviously they have to pay fees. So now let me put it like in a simple language, what is rule 7A? So under rule 7A they says that if there is, number one, if there is any changes in the partnership firm's partner or company's director's personal detail, you have to provide this information to the, you have to give the intimation to the authority, that is IBBI, after paying certain fees whatever is prescribed. And second is, if there is any changes in the registered valuer, if it is a partnership firm, then and any changes in the partnership agreement. If the registered valuer is a company, and any changes in the memorandum of association. So such changes also you have to specify, intimate this to authority, and this you have to do it within prescribed time and after paying prescribed fees, whatever they will prescribe in the annexure. So these are the, this is the new rule they have inserted. So you can pause the video and you can copy this. Okay, now we will going to discuss next amendment. This amendment is from a foreign company chapter. Under a foreign company chapter, under section 380, under section 380, when I say foreign company, that is a company incorporated outside India chapter. So I've just, in a simple language, I told you the foreign company thing. So under that chapter, company incorporated outside India, that is foreign company chapter, there is a section 380. Under that section 380, we know that whenever a company incorporated outside India, foreign company, start a place of business in India, and then they carry the business activity in India, they have to give lot of details, documents, they have to file it to the New Delhi ROC. So in that lot of documents, along with that, they have to also give the information of the directors of that foreign company. So now the amendment is in that part. So what information you have to give to the New Delhi ROC, that what is the business of the company, where is the registered office, which is the person to whom the information can be given, then details of the directors, then whether the place of business opened or closed earlier. So these are just for a reference I have told you. So when you start a foreign company in India, I mean whenever you establish a place of business in India, you have to give, under section 380, you have to give lot of documents to the New Delhi ROC, and in that only they says you have to also provide details of the director, and for the details there is a separate rule 3. In that lot of details of the director of that foreign company we need to provide, and in that there was one detail, along with others there was one detail, and that was father's name you have to give, mother's name and spouse name. So earlier the reading was this, that director's father's name, mother's name and a spouse name you have to give, but now they have amended it. Now it is father's name or mother's name or a spouse name. So instead of this word and, now they have changed it to or. So now what is the new reading? That when you provide the information of the foreign company to New Delhi ROC, you have to give details of the director along with other details. What you have to give? Father's name of the director, mother's name or spouse name of the director. So either you give the mother's name or you give the spouse name. So it is like that. So again, this amendment is not very important from exam point of view, but I have just covered it for the sake that you will be having confidence, okay, this amendment also I have covered. But the amendment which I am going to discuss now is somewhat important, and it is from a chapter Prevention of Money Laundering Act. Under the chapter Prevention of Money Laundering, we have studied the word reporting entity. And now what is reporting entity, that you know? There are 4 persons covered in reporting entity: bank, financial institutions, intermediary and person carrying on designated business or profession. These 4 people are the reporting entity. I am not going to explain you the entire provision, but just for the sake of reference I am telling you what is the job of this reporting entity. They have to provide lot of informations to Enforcement Directorate and other officers under PMLA Act. And why such obligation is there? Because they people are someone who give service to those people who deal into money and such other related things where there are some chances of money laundering is possible. So that is why they have to report it, and since they report it to the authority, these 4 people are called as reporting entity. So we already know what is bank or what is financial institution or what is intermediary and what is person carrying on designated business or profession. These 4 people are what? These 4 people are the reporting entity. Now in this, the 4th point, that is person carrying on designated business or profession. This person, he is also a reporting, and it is also a reporting entity. Now in this only they have covered real estate agent as a reporting entity. They have covered real estate agent as a reporting entity. But the problem is, what is the definition of the real estate agent? Earlier they have not said this. So if you read it, the definition was like this, that who is a reporting entity? So a bank or a financial institutions or a intermediary or a person carrying on designated business or profession, they are the reporting entity. Under person carrying on designated business or profession, under person carrying on designated business or profession, they have written real estate agent as a reporting entity. But what is the definition of real estate agent? So now they have just give the reference of RERA Act. See here it is written, section 2 clause ZM of the RERA Act 2016. That definition you have to use here. So now I will read it like this, that who is a person carrying on designated business profession. So real estate agent is a person who is a person carrying on designated business or profession. And what is the meaning of real estate agent? So this is, it is the same meaning as given under the definition of RERA Act. So it is simple that. So it is not a very major amendment, but they have just made this clarity. Now they have inserted one very important point. Under person carrying on designated business or profession, they are nothing but reporting entity. Under that they have covered these peoples. A people who is covering virtual exchange of virtual digital asset. See, read along with me. When the following activity when carried out on behalf of another natural or legal person in the course of business as an activity for the purpose of said subclause, namely exchange between virtual digital asset, exchange between one or more forms of the virtual digital asset, transfer of virtual digital asset, administration of virtual digital asset. So if you will see at all the points, somewhere if you are providing the services of virtual digital asset, you will also be covered as a person carrying on designated business. So let's say if I do exchange in virtual digital asset, or I do the safekeeping of the virtual digital asset, or I provide the services related to virtual digital asset, so I will be covered in the person carrying on designated business, and I have to report it to whom? I have to report my client's details or transactions to the, not details but client's transactions to the authority, let's say ED. So now director. So now what is virtual digital asset? See, I am not going to get into a big detailing of this because that is not needed for your exam point of view, at least not here right now. But I will just give you the small briefing about virtual digital asset. One, you have already studied cryptocurrencies. Fine. Under, for example, bitcoins. So those who deals into a bitcoin, etc. Can I say they will be covered here? For example, let's say coin DCX, let's say for example I am telling you, let's say coin DCX deals into bitcoin. So they are dealing into a virtual digital asset. They have to give the whatever transaction information required by the director, they have to provide those informations to the director or to the authority of the PMLA. Another example of virtual digital assets, a person who deal into e-books. So these are the virtual digital assets, but you don't have to get into that much. You have to just remember Bitcoin or something, people who deals into Bitcoin, etc. is nothing but dealing into a virtual digital asset, and those who provide services related to these will be termed as person carrying on designated business. One more thing they have used here is a fiat currency. Again, I told you, you don't have to get into much details of the fiat currency, what is fiat currency, but you can just for the knowledge purpose, you can remember one example I am telling you, those currency which is not backed by the government, for example gold, silver, these are nothing but a fiat currency. So if you are doing all these businesses, then if you are providing services related to virtual digital assets or fiat currencies, then you will be termed as person carrying on designated business, and you have to give and you will be a reporting entity, and you have to give the information prescribed to the authorities of the PMLA. So this is amendment from PMLA chapter. So finally we have completed all the amendments, which is new amendment for November 23. As far as rest all amendments are there, for that you have to see the lecture of May 23. In this remaining amendments I have already covered. Okay, now we will move to question answers discussion. So in this first part we are going to discuss is part 2 question answers case scenario. Now please understand, the original director, while carrying out the processing of DIR 5 form which dealt with the application for surrender of DIN. So can you say first thing which you understand is something related to surrender of DIN is discussed in this case scenario. Pursuant to section 153, deserve that Mr. Bridge, an individual, has applied for obtained to DIN. So this is, see, whenever you read any case study, you should always, case scenario, should always try to find out that what is there, which section is there and everything. For example, can I say this is, they are talking about section 155. See, 155 talks about that you cannot have 2 DIN, you can have only 1 DIN, and Mr. Bridge has obtained 2 DIN. So this is somewhere we can just interlink. Okay, 155 Companies Act provision is coming over here. Now this is number of Ministry of Corporate. This first DIN they have obtained on this day, and second DIN they have obtained on 4th January 21. So these are 2 different dates where they have given the DIN number. Now upon observing the 2 DINs by an individual, the regional director issued directions to the ROC. As we know, RD is a superior authority to ROC compared to ROC. RD has given instructions, directions to the ROC that, see, Mr. Bridge has obtained 2 DIN. See, only 1 DIN is allowed. Since Mr. Bridge has obtained 2 DIN, now RD got to know about this. Now RD has given directions to the ROC about the same. White office letter dated so and so to take the necessary action for the violation of section 155. As I already told you, 155 says that you can obtain only 1 DIN. In this question, since this person has obtained 2 DIN, there is a violation of section 155. As you know, if there is a violation of section 155, penalty is there in section 159. So if the violation is of 155, penalty is there in 159. What is the penalty, that we'll discuss in some time. Upon receipt of the directions, the regional director, from the regional director, the ROC having reasons to believe that Mr. Bridge has violated the provisions of Companies Act by obtaining more than 1 DIN, ROC issued show cause notice to Mr. Bridge for the violation of provisions of 155, asking him to show cause why the penal action could not be initiated against him for alleged violation. So in second point, this is ROC has given show cause notice to whom? ROC has given show cause notice to Mr. Bridge. To Bridge they have given show cause notice. Mr. Bridge has admitted that he has obtained 2 DIN in first place, and further he stated that one of the DIN is surrendered and justified in his action. What Mr. Bridge is saying now, that, see, now let us conclude this entire case scenario. What happened now, here one director is there, name is Mr. Bridge. He has obtained 2 DIN, and after obtaining 2 DIN, can I say he filed a DIR 5 and he surrendered 1 DIN. But there was a good amount of time, good amount of period for which he has had 2 DINs in his name. Now this information RD got to know, and RD has given an instructions to the ROC, and ROC has given show cause notice to the Mr. Bridge, and said that I want to do the enquiry and everything about you. Then once Mr. Bridge got this show cause notice, Mr. Bridge said, yes, I did the mistake, I have done the mistake, I have had 2 DIN, but now I have already surrendered 1 DIN. But now my entire, on this entire question, I want to ask you one thing, students. Since he has accepted his mistakes, whether he will be relieved from the penalty given under section 159? So answer is no. Can I say, since you have held DIN for a 2 DIN for a particular point of time, you will be liable for the penalty, and all that thing we have to discuss now. Now let us discuss one by one every question. Does the surrender of DIN given in the given case scenario by Mr. Bridge is justified and had no liability under Companies Act? So tell me, if you have already held in more than one din for certain period of time, in that situation, since you will do surrender, since you have done surrender of the din, will you be relieved from the penalty? See, it is like that, I'll tell you. See, I picked up one person, I have beaten him very badly. Now I put that person in hospital as a compensation. So does it mean I will not be penalized? I will be definitely penalized. Here, Mr. Bridge has had 2 din for a good amount of period. So now he will be liable for penalty for sure. And that too under which section? Section 159. So what they are saying, held no liability under Companies Act. So obviously there will be liability. So answer cannot be yes. So A is saying yes. C and D is saying yes. So this cannot be answer. He will be liable for penalty. So answer will be B. No, as Mr. Bridge has already been allotted a din under section 154. He shall not apply for, obtain or possess din, and he will be liable for penal section. Under which section? 159. I hope it is clear. Now moving on. So right answer is B. Second, state which of the following may be valid for reasons for surrender of din by Mr. Bridge in the following situation. If when you surrender din, hope you remember, when you surrender din, you have to file DIR 5. When you surrender din, you have to file DIR 5, in which you have to give declaration. What declaration you have to give? That you have not been appointed as a director and you have not used with that din. Using that din, you have not been appointed as a director and you have not used that din anywhere in the document. So when you surrender the din under DIR 5, you have to give this declaration. So we have to see whether any of the matching answer is there or not. Statement 1, the din is not duplicate. This is not the declaration reason under DIR 5. Din was not obtained in a wrongful manner. This is also not the information. Statement 3, on an application made by him to surrender his din along with declaration that he has never been appointed as a director in any company and the said din has never been used for filing of the document with any authority. So this is the declaration we have to give in DIR 5. So statement 3 is only correct. So now we'll see options. Both statement 1 and 2 are correct. No. Both statement 1 and 3 are correct. No. Statement 3 is correct. Yes. D is no. So right answer will be C. Now let us move to the next point. Who shall be considered to be liable for more than one din to Mr. Bridge? And then see, Mr. Bridge has 2 din. Now who will be liable for that? Now all nonsense, not nonsense, but all unnecessary options ICI has given. See, they have written central government, RD, registrar. Why they will be liable? Can I say obviously they are the government authority. If someone has applied and they have issued, so obviously they will not be liable. Who will be liable? The person who has obtained 2 din. So obviously the right answer is Mr. C. Mr. Bridge will be liable for this. Correct. Next point. Compute the total penalty on person as per above question by the ROC. If the default after the first default continue by a further period of 907 days. So as you know, what is the penalty? See, it is up to 50,000 plus 500 per day. So it is 907 days. So it is 500 into 907 plus 50,000. So right answer is 5,03,500. See, this is up to 50,000, but since all other options are not matching, so to match the answers, we will take it exact 50,000. And in exam also you can do this. So this is the penalty. So up to 50,000 plus 500 per day. So 90. So right answer is D. Along with me, you all also can mark the answers. The next is Abhi Limited. Abhi Limited, a listed company, proposed Mr. Arun and Raj before the board to appoint one of them as a small shareholder director. As you know, small shareholder director is section 151. Fine. So this is from this thing, and there is also rule. Rule 7 is there. So what is the provision they have given? Particular about proposed SST. Mr. Arun, he holds 50 preferential shares of Abhi Limited. Also currently working as a small shareholder director in Sona Limited, who is not a competing business to Abhi Limited. If first of all, can I say they have given shareholding, but shareholding is not relevant. Please understand. Shareholding is not important. Not important. Fine. Shareholding is not important. You can have more than 20,000 shares. You can have less than 20,000 shares. You can have no shares. You can still become small shareholder director. What is important? Shareholding is important only for small shareholders, not the person who want to become small shareholder director. So this first point is not important. They have just given this to confuse you. Second line, they are saying small shareholder director in Sona Limited, which is not in competing business. Since it is not in competing business, you can become small shareholder director in two companies provided they are not into the competing business. So here this appointment is a valid appointment. So this is valid appointment. Second point, Mr. Raj, he is not holding any shares of Abhi Limited. Does not make any difference, as I told you. He is currently representing two different companies, one as a director and another as a small share director. Now wait. Can I say whether they are into a competing business or not does not make any difference. Why? In the first company he is just a director, ordinary director, not SSD. So anyway he can become this, does not make any difference. And he is SSD in one company only. So you can become SSD in two companies. Currently he is a director in two companies, but in one company is an SSD and in another company is an ordinary director. So this will not be taken into consideration right now for that two calculation. So he is a SSD, small share director, only in one company. So he can become in second company, that is this company. So this appointment is also valid. Examine in the light of the given fact as per the Companies Act, the correct statement on the validity of the proposal of appointment of Mr. Arun and Raj as a SST. So can I say both appointment is valid? So we will see whether any option is given like that. They are saying only Arun is valid. So this is not the right answer. Both are valid now. They are saying Raj and Arun both is valid. Third option. They are saying Raj is invalid and Mr. Raj and Arun is invalid. So invalid is will see point 1, 2 or 4. They are saying either one or both director are invalid. So they are the wrong option. Why? Because both appointment is valid. So right answer is third point. So right answer is third point. I hope you all have understood. So in A say statement 1 is correct, no. B say 1 or 2 is correct, no. C says statement 3 is correct. Now this is right. So right answer is C. I hope it is clear. You can just do whatever writing work you want to do. Fine. Shall I proceed? Now, sixth point. ABC Limited was dissolved on January 120. After 2 years, on January 120, the ABC, the company creditor, Mr. Patel, applies to the tribunal to declare the dissolution void. Mr. Patel had an outstanding amount of 1 crore owed by ABC Limited. However, before the dissolution of ABC Limited, company write off the outstanding amount in its books of accounts. See, please understand what they are trying to say. Suggest your opinion. What will be the tribunal as per the provisions of Companies Act from above this? The tribunal will make an order declaring the dissolution void. So this is from a winding up chapter. See, they want to make the dissolution void. As we have already studied, if for making the dissolution void, it is allowed within 2 years. Within 2 years. Now it was dissolved on January 1, 20. So 2 years will get completed on 31st December 21. Correct? So January 1, 20, 1st January 20 to 31st December 20. and second is 31st December 21. So 2 years will get completed. So to declare the dissolution void, you have to make application till this date, but you have made the application after 2 years, that is on January 1, 22. So this application itself is invalid, and hence what we can write, that dissolution cannot be declared void now. Dissolution cannot be declared void. Okay, now tell me why it cannot be declared void. Why it cannot be declared void? Because can I say the application has been made after 2 years. Now let us understand this. The tribunal will make an order for declaring the dissolution to be void. Wrong answer. Ask the liquidator to forward the copy. It is not possible, only this will be done after the dissolution has been declared void. But since it cannot be declared void, this is also not possible. Certified copy of dissolution order is to be filed by Mr. Patel. Not possible. The tribunal will not grant the application. Why? Because it is filed after time limit. Filed after time limit of 2 years. So right answer is option 4, that is T. So right answer is T. I hope it is clear. Now moving on to the next MCQ. Bhola Limited is a company that was registered on 1st January 2015. However, the company has not been carrying on any business or operations since the financial year ending on 31st March 2021. The registrar is of the view that if a company does not carry on any business or operation and has not applied for obtaining the status of a dormant company, he has the right to issue the notice of company and all its director regarding the intention to remove the company's name from the ROC. Hence, the registrar issued the so-called notice on 1st Feb 2023. In this, the most important line is this. If a company does not carry on any business or operation that has not been applied for obtaining the status of a dormant, he has the right to issue the notice. See, this is from a section 248 2. Section 248 subsection 2, in which ROC has a right to remove the name of the company on the grounds which are given in section 248(1). So the ground is there that the company has not been carrying business, but the company should not carry business for 2 years continuously. Now can I say he is not been carrying on business from 31st March 21. So 2 years from this period we have to count, which will come to 31st March 23. So if the Bhola Limited is not carrying on any business till 31st March 23, then only ROC has a right to send notice for removal of name of such company under section 248(2). Now here the ROC is sending the notice on this date. So can I say this notice of ROC is invalid? Now we will see the options. Choose the correct option. The registrar need to issue notice only after the financial year 31st March 23. Apparently A is correct, but we will still read the other options. The registrar need to issue notice within 30 days. Wrong. The registrar can issue notice immediately after this date. Obviously wrong. The registrar can issue notice within 90 days. Wrong. So this option is the correct option. What you can do, you can pause the video and you can write all these things in your notes also. Fine. Now let's move to the next MCQ. Supriya is one of the director of Paridhi Tours and Travels Limited, whose paid up share capital is 4 crore 50 lakhs. She hold shares worth 13 lakh 50 shares in Swikriti Suppliers Limited, whose paid up share capital is 2 crore and is in the business of supplying tourist buses. Being in the need of 3 tourist buses in the existing fleet of 10, PTTL, that is this company, through Supriya approached SBSL, that is this company, means PTTL, and second is SBSL is doing business and Supriya is director in both the company. And in SBSL, Supriya holding how much shares? Supriya is holding 13 lakh 50,000 rupees shares. Can I say The total share capital is 2 crore and Supriya is holding 13 lakh 50. Can I say we have studied under section 184 subsection 2 that if you hold more than 2% shares, then that will come under the interested director, and if you are doing transaction with that company, then there are several conditions we need to fulfill. Now can I say if Supriya would have held more than 4 lakh shares, more than 2%, then they need to satisfy a lot of conditions. Now can I say she is holding 13 lakh 50,000 shares. So obviously Supriya is an interested director. Supriya is the interested director. Fine. Supriya is what? Supriya is the interested director. For the this. Through this, for the purpose of purchasing the buses, knowing fully well that Supriya holds a certain amount of shares in SBSL, making her an interested director. Requirement: out of the following 4 options, which one is applicable in the given situation? Supriya is interested director holding shares of this value exceeding 1 lakh. Technically, if you see all the options, there is no much sense of these options. But out of all these 4 options, what is more logical, I will tell you. See, here the criteria should be holding more than 4 lakhs. So this is, they are talking holding more than 1 lakh is not very specific provision. Second, they are saying holding more than 1 lakh 50 is not very specific provision. Holding more than 2 lakhs, not very specific. So technically this is more specific provision. So answer should be D. So if you will see, this MCQ was not a complete MCQ. There was a haywire provision, but out of this also, can I say D is more rational, I would say. Now point number 9. For point number 9, there are some issues I will going to discuss. So that is the reason, after all the discussions, in the end I am going to discuss the 9 point. I will tell you what is the issue and everything in detail. Moving on to the next point, that is 10th MCQ. ABC Corporation, a listed public company, is engaged in manufacturing sector. The company shares are traded on recognized stock exchange. The security SEBI, regulatory authority to stock market, receives credible information suggesting the involvement of certain key executives of ABC Corporation in insider trading. Based on the above provision, which among the state provisions can SEBI undertake during the investigation? So can I say what are the SEBI's power when insider trading is going on? This is from a SEBI Act chapter. What are the powers SEBI is having when insider trading or such kind of thing is going on? So SEBI can do what? SEBI can suspend the trading of ABC Corporation. Is it allowed or not allowed? So yes, they can suspend this. Yes. SEBI can impound and retain the proceeds of securities of the insider trading. Yes, they can do this also. SEBI can attach the bank account of intermediate executive insider for a period of 2 months. Now somebody will say, sir, even this they can do. They can attach the bank account, but not for 2 months. They can do it for 90 days. So this is not the right option. SEBI can suspend the office bearer of ABC Corporation. They can suspend, but they can suspend to stock exchange, not to the ABC Corporation. So even this is not the right option. So right option is 1 and 2. So this is 1 only, no. 1 and 2, yes. This is no, this is no. So right answer is B. So for this we will see 10B. Now we will move to next point, that is 11th. What they are saying, Jain Limited, a corporate debtor classified as small enterprise, is facing financial difficulties and owes 75 lakhs to the creditor. 75 lakhs to the creditor. Despite effort, Jain Limited is unable to recover the money it lent to the debtors in times of need, leading to the default in setting up due to its creditor. ABC Limited, a financial creditor, decide to initiate the PPIRP. If for CIRP the default amount should be 1 crore, but for PPIRP it should be 10 lakhs. And since it is 75 lakhs, this is the correct, they can go for it. Under the provisions of IBC, the financial creditor who are not related party proposed Mr. Q as RP. So proposing financial creditor should have 10% and it shall be accepted by 66% to conduct PPIRP. Such financial creditor of the corporate debtor representing 66% in value of the financial debt to such creditor have approved such proposal. So can I say it shall be proposed by FC, unrelated FC, should have value of at least 10%, that is given in rules, and it shall be approved by 66% of the COC, that is financial creditors. So based on the given scenario, is the act of financial creditor proposing and approving Mr. Q as the RP valid for initiating PPRP process under the IBC? Yes, because the FC approving proposal of appointment of RP were representing the required percentage of financial debt due to them against the limit specified. No, can I say this application is a valid application? Why? Because it is proposed by the requisite number and approved by the 66% FC. So can I say answer has to be yes. So no we will delete, and again this no we will delete. D is yes. What D is saying? Yes, because the corporate debtor has committed default and the financial creditor have authority to propose the RP. Yes, because the financial creditor approving the proposal of appointment of RP were representing the required percentage of this. If you will see, both A and D is saying yes, but D does not have any specific provision. It is more general in nature and this is more specific in nature. And if in exam you will get this type of question, you should always go for more specific. So the right answer is A. Right. Next, we'll go for the descriptive question. HUB Limited, an unlisted public company, is neither a subsidiary nor a holding company of any other company. The company is also not a part of any joint venture. From the latest audited financial statement of the company, financial year 22-23, following financial figures have been revealed. And then they have given these figures. The company has never appointed any independent director. So apparently this question is for independent director. Now, first of all, what we will see? We will see whether this company need to appoint independent director or not. We will read this entire question later on. First, we will see what is the status of this company. This is an unlisted company. And for unlisted company, we know that if the paid up share capital is more than 10 crore, turnover more than 100 crore, paid up share capital, turnover exceeding 100 crore or borrowing exceeding 50 crore. Basically there are three limits are given. Wait, I will not write these limits right now because some question will come, we will discuss that and then I will write the limit. But then there are three limits given for paid up share capital, turnover and borrowings, loan, debenture, deposits, borrowing. If those exceeds the limit, then they have to appoint at least 2 independent directors. Now we will see. Can I say the paid up share capital is 9 crore. So it does not exceed the limit. It is not crossing the threshold of 10 crore. Then turnover is not crossing the threshold of 100 crore. So not exceeding. And loan, deposit, debenture is 99 crore. Now it is exceeding the limit of 50 crore. And there is a or provision in this. Means even if 1 point you exceeds now, you have to, you have to appoint independent director. Since this loan, deposit, debenture point they are exceeding, this company need to appoint how many independent directors? This company need to appoint 2 independent directors. Had it been listed company, it is 1/3. But for unlisted company, it is 2 independent directors. Now you see, after completion of statutory audit of the company of financial year 22-23, board felt need to expertise opinion on various financial matters in coming time. So one of the directors, Mr. A, insisted the company to have at least 1 independent director. A is saying 1 independent director. So A is wrong. B is saying you have to appoint 2 independent directors. So B is right. C is saying not, they do not need to have any independent director. C is saying 0 independent director. So C is also wrong. So whatever Mr. B is quoting is correct. Company need to appoint at least 2 independent director. Referring to the relevant provisions of the Companies Act, the relevant rules made thereunder, advise the company whether the contention of above director is correct. So you can write like this, that the contention of Mr. B is correct. Mr. B is valid. Applying relevant law in the given situation, decide whether the contention of any of the director is correct in case HUB Limited is a subsidiary of SUB Limited. If you remember, there are 3 types of company: joint venture company, wholly owned subsidiary, and dormant company. For these 3 types of company, they don't have to comply with the provisions of independent directors appointment. So if you will take those exceptions into consider, can I say, then the company need not appoint the independent director. But here you need to be cautious in exam. See, they are saying HUB Limited is a subsidiary of SUB Limited. So it is not wholly owned subsidiary. The exception is for wholly owned subsidiary, and it is just a mere subsidiary, not a wholly owned subsidiary. Since it is just a subsidiary, not wholly owned subsidiary, those exceptions are not valid over here. So the answer will still remain same as it is just a subsidiary. Had it been wholly owned subsidiary, the provision would have not been applicable. But mere a subsidiary, provision is still applicable. So answer will remain same. Moving on to the next question. BPLUS Limited engaged in manufacturing of ready-made garment. He is having sufficient profits to make payment to its managerial personnel. The company, in order to provide proper justification to the efforts of managing director of the company, intend to pay him the maximum remuneration permissible under the provisions of Companies Act 2013, but without seeking any permission from the members of the company. See, this question, if you can see carefully, is from section 197. You can also say schedule 5. See, you want to pay remuneration to MD. So if you want to pay remuneration to MD, WTT manager, and when the company has an adequate profit, can I say, they are saying you want to pay it without the permission from the members of the company, without SR of the members. In that case, how much you can pay to the MD? So you can pay to the MD to maximum 5% of the net profit. Net profit is calculated as per section 198. So first of all, here we have to do 2 things. Number 1, we have to calculate net profit. Now you will say, sir, but they have already given us net profit. Why we need to calculate this? So if I am going to read it further, you will find out that they have also given a lot of adjustments. So after taking those adjustments into the consideration, we will find out what is the net profit, and then from that net profit we will multiply 5%, and then we will get the value of the remuneration which we can pay maximum to MD. Because how much we can pay to MD? Maximum 5% of the net profit. So over and above the normal allowable income and expense, the statement of profit and loss of the company included the following income and expenses. Referring to the applicable provisions of the Companies Act 2013, calculate the maximum remuneration permissible for the managing director, for which no permission from the members of the company will be required to be taken by the board. So this is the provision they are saying. Now they have credit side, means they have given you income. These income are already credited. We have to see whether it need to be credited or not. If it need to be credited, since it is already credited, we have to ignore it. If it is not needed to be credited, but still it is credited, then we have to reduce it. So we have to take that into consideration. Subsidy received from the central government, not in capital nature, and no direction has been given by the central government with regard to subsidy. So it is free to use. So we can reduce this, we can take this as an income, and we have already taken this as an income. So this need to be ignored. Profit earned by way of premium on issue of shares. Now this is not your profit. So this cannot be taken into consideration. And since they have already taken this as an income, we have to reduce this. Profit earned by way of premium on issue of shares. Same. This cannot be treated as an income. Since they have already treated this as an income, we have to reduce this. Profit on sale of forfeited shares. Even this cannot be taken as an income. Since they have already taken this as an income, we have to reduce this. Profit on sale of fixed assets of the company. Now they are saying fixed assets has been sold. The cost of fixed assets is 20 lakhs. WDV is 15 lakhs. That means what is the depreciation value? 5 lakhs. And they have sold fixed assets for how much? 22 lakhs. So if we'll see technically, the profit is nothing but 7 lakhs, but you cannot take this entire profit. See, please understand there are two factors. Anything, a difference between WDV and cost is nothing but the reversal of depreciation, and reversal of depreciation is the business income. So out of this 7 lakhs, 5 lakhs is reversal of depreciation, which is a business income. So you have to take that as an income, but whatever is above the cost, it cannot be your business income. So that point you cannot, that amount that you cannot take as a business income. So that 2 lakhs will not be treated as a business income. So you have to reduce this 2 lakh ka value. I hope it is clear. So again I am telling you this point. See, the cost was 20 lakhs, WDV is 15 lakhs and the depreciation is 5 lakhs. And they have sold it for 22 lakhs. So technically speaking, the profit is 7 lakhs. Why? Because selling price minus WDV, that is 7 lakhs is the profit. But out of that, 5 lakhs is the reversal of depreciation. And that is why that can be treated as a business income. You have studied that in income tax also. Notional business income. But the value above cost, that is 2 lakhs, is not your business income. It's a capital gain. That will not be taken here. So out of this 7 lakhs, 5 lakhs will be treated as business income, but the balance 2 lakhs will not be treated as a business income. So we have to reduce the 2 lakhs amount. Now if you see on the debit side, the interest on debenture issued by the company, now that is expenses. The expenses which should be allowed and already allowed, we will ignore that. So interest on debenture is a business expense taken on loan, kind of loan only. So this is allowed. So we have to ignore this. Interest on unsecured loan, that is also a loan only, and that is a business expense allowed. So we have to ignore that. But provision for income tax is not allowed as expense, and since it is already taken as expense, we will add back this amount. We will add back this amount. So now see what is the value. If you will see the net profit, how much is the net profit? You please tell me. The net profit is how much? 3 crore 20 lakhs. So we'll write 320 lakhs. Out of this 320 lakhs, what will reduce? We will reduce 10 lakhs. 10 lakhs will reduce 20 lakhs, will reduce 8 lakhs, will reduce 2 lakhs, and will add back 50 lakhs. So see the value. 10 lakhs, 20 lakhs, 8 lakhs, 2 lakhs, 50 lakhs. So the value will come 230 lakhs. This is the net profit as per section 198, and 5% of this will be, this is coming out to be 330 lakhs. Five percent of 330 lakhs will be 16 lakhs 50,000. So this is the maximum remuneration allowed to director without SR. You can pause the video and you can copy this. Okay, now let us start with question 14. What is that in question? Modern Furniture Limited is in expansion mode. Recently, it has established the branches and showroom in 25 different cities of India. Following are the balances shown on 9th December 22. When Board of Modern Furniture Limited is considering to borrow money for expansion activity. Before reading forward, I want you to see the last line. If you see the last line, what they are saying, advise the board of director how much they can borrow as per the requirement of section 180 subsection 1 clause C of Companies Act. If you remember, in this section what we have studied that if your present plus proposed borrowing taken together exceeds what? Exceeds paid up share capital plus free reserves plus security premium, then to do that transaction, to do that borrowing, can I say you need special resolution of the shareholder. So basically, can I say now in this question, the moment you read this now, one thing should go in your mind, that now what we have to do, now we have to calculate our paid up share capital plus free reserves plus security premium, and we have to see how much it is, and if my present plus proposed borrowing exceeds how much, exceeds this thing, paid up share capital plus free reserves plus security premium, then in that situation I have to pass special resolution of the shareholder. Okay, so that is what we have to study. So we'll just find out the limit one by one. First, what we have to do, we have to find out what is the net worth. So first let us find what is the value of paid up share capital plus free reserves plus security premium. So the first value is share capital and the amounts are in thousands, so we have to consider that as well. So share capital, will we take it this? Yes, we'll take share capital. Will we take free reserves? Yes. Will we take capital redemption reserve? This is not free reserve, so this will not be considered. Will we take revaluation reserve? No. Again, this is not free reserves. Will we take security premium? Yes. So we will take this 1, 2 and this thing, security premium 3. As far as secured loan and unsecured loan is concerned, this is not your capital, this is your loan. So this is nothing but existing borrowing. Now wait a minute. So first what we will take? We will take 50,000. 50, not 50,000, 50,000 into 1,000 we have to do because amounts are given in 1,000. Then 1,16,000, then 32. So we will just add this up now. So paid up share capital is 50 plus free reserves 1,16,000 plus security premium 32 into 1,000. So I will also do this. Why into 1,000? Because amounts are given in 1,000. So it is coming out to be 19 crore 80 lakhs. It is coming out to be 19 crore 80 lakhs. This is my capital. So if my present plus proposed borrowing is up to 19 crore 80 lakhs, BOD can do it. More than that amount, you need special resolution of the shareholder. Now, in this question, this is that board of director, how much they can borrow. Means, can I say it is without shareholder approval? Without shareholder approval. So without shareholder approval, they can borrow present plus proposed together, they can borrow up to 19 crore 80 lakhs. So now we have to find what is my present borrowing. So this is the total borrowing is possible. This is the total borrowing possible. So now we will find what is present borrowing. Present borrowing, how much? So now let us see that. In your existing borrowing, you will take 98,500 and 33,200. Now this is existing borrowing, but if you read what they have written, unsecured debt loan includes temporary loan of 30 lakhs. If we have studied that if it is a temporary loan, it will not be included in the borrowing, provided it shall not be of capital nature. So out of this 30 lakhs, this 13 lakhs for the purpose of financial expenditure of capital nature, whereas 8 lakhs on demand. So if you will see, this 13 lakhs is of capital expenditure. So in this borrowing, they are saying that this is a temporary loan. But this out of this 30 lakhs, 13 lakhs is a temporary loan for capital nature. So it will not be treated as temporary loan. So it will be included in the borrowing. Now the remaining 8 lakhs and 9 lakhs, these two loan is not a temporary nature. So now again I am telling you, see, they have given us existing borrowing, that is 98,533,200. This is the existing borrowing. But in this they says that we have included what? We have included temporary loan. So if they have included a temporary loan, that is how much amount? 30 lakhs. We have to, ideally we have to remove this from the existing borrowing because it is not included. But the problem is, out of this 30 lakhs, the 13 lakhs loan is of capital nature. So it will not be excluded. It will be considered. It will be included in the existing borrowing. So remaining 9 lakhs and 8 lakhs, it is not of capital nature. So this will be excluded. This will be removed from the existing borrowing. So now let us learn this. So present borrowing, how much? 98,500 plus 33,200. And the amount is given in thousands, minus how much? 9 lakhs and minus 8 lakhs. So now let us find out how much it is coming out to be. So it will be this is coming out to be 13 crore. Now your present borrowing is 13 crore, your total borrowing is 19 crore 80 lakhs. So borrowing, proposed borrowing without SR of shareholder, is 19 crore 80 lakhs. 19 crore 80 lakhs minus 13 crore is coming out to be 6 crore 80 lakhs. So this is the proposed borrowing without shareholder approval. I hope you must have understood this. If you want, you can pause the video and you can copy this. Fine. Now we will move to the next question. 15. What they are saying, based on application under section 272 of Companies Act 2013 made by Good Luck Limited, the tribunal appointed a provisional liquidator on 26th May 2013. The company seeks your advice about the consequences of the legal action already initiated in the following circumstances. See, they are talking about the court case. If you have studied winding up chapter, then you must have remembered that we have studied in section 279 of the Companies Act 2013. What we have studied? We have studied that when winding up is initiated, after winding up initiated, if any case is, then no cases will be initiated. And if already it is going on, then it will not continue. So it cannot be initiated or nor it can be continued. Not initiated and nor it can continue if it is already initiated as far as winding up is concerned. And if you want to do this, we have to take whose approval? We have to take NCLT's approval. We have to take NCLT's approval, and NCLT has to reply within how many days? 60 days. But this is not applicable for cases pending before High Court and Supreme Court. So I have just briefed out those sections. So here what you have to see, whether there is any case pending or you want to initiate. So ideally you cannot initiate, you cannot continue also, provided if it is not pending before High Court, Supreme Court. So if it is pending before High Court, Supreme Court, then it will continue anyways. But if it is pending below High Court, Supreme Court, that is in lower court, district court, that court. So in that court, if it is pending, then it cannot continue. Or if you want to, if it is not pending, you want to initiate, you cannot initiate also. To continue also, you have to take whose approval? You have to take NCLT's approval, and NCLT has to reply within 60 days. So now let us see what is given. A request letter was already issued to Good Luck Limited with reference to check bounce case by a creditor. The creditor now wants to go to the appropriate court of law to take legal action. So can I say this is nothing but not in a high court, it is in a lower court bounce check case, and they want to initiate it. So can they initiate? Answer is no, cannot initiate. A case law relating to, because it is lower court, you can just write. A case relating to encroachment of law land already initiated made by Mr. A against Good Luck Limited, which is pending and hearing is in progress in the district court. And now it is pending before district court. I mean, the case law is pending before, already initiated, but it is pending before district court. So can you continue? Can you continue this case? Answer is again no. But if you want to do it, whose approval you need? NCLT approval. And NCLT has to reply within how many days? They have to reply within 60 days. A case relating to acquisition of building against Good Luck Limited is pending before the jurisdiction High Court. It is pending before High Court, so it will continue. So now to put it in simple language, what I will tell you, this 1 and 2 cannot continue. 1 cannot initiate and 2 cannot continue. You want to do it, you have to take NCLT approval. And as far as 3 is concerned, it will continue. Fine. See, brief answers are already there. I am just trying to give you the edge from where you can initiate your answer, how you can think. So I am just giving you those references. So please pause the video and you can write it down. Fine. Now let us proceed. Now, next is question number 16. Please understand. The requisite number of shareholders of a common limited which has been incorporated under the Companies Act 2013 filed an application with the NCLT under section 241 highlight the mismanagement in the conduct of affairs of the company. Taking cognizance of the application, NCLT passed an order under section 420 on 20th October 22. So this is an NCLT order passed on this date, 20th October 22, providing the sought after relief to the shareholder of common limited. On finding some mistake in the order, the shareholder brought the notice of NCLT for rectification. So can I say it is a rectification of order? If you know, if the mistake is apparent in nature, in that situation, this can be rectified within 2 years. So discuss in the light of provisions of Companies Act, can it be rectified? So the order which is passed under section 420 can be rectified within 2 years. What is the maximum time limit within which the NCLT order can amend? 2 years. What will be your answer if the group of shareholders make an appeal against order on 15th November 22? So you know that if the order is in appeal, then NCLT cannot rectify that order, because if it is already subjudiced to a higher authority and NCLT will try to rectify it, then it means that he is trying to overpower this superior authority. So that is not allowed. So if when it is in appeal, when in appeal, I'll just write shortly, then cannot rectify, then you cannot rectify. So you can just copy this down. Fine. I hope you all are comfortable. So now we'll move to the next question. So I hope you could reconnect this. This we have studied in a NCLT chapter. What we have studied, that if NCLT passes any order and if subsequently NCLT suo motu or on an application observe that there is some apparent error in the order, then in that situation that order can be rectified, and the time limit for rectification of the order is 2 years. So it can be rectified within 2 years. then if it is under an appeal, then rectification is not possible. So this is what we have studied. Okay, now moving on to question 17. Giza Software Limited, a company registered in New Zealand, which has recently started its operation in India through a branch office located in Mumbai. The company has appointed Mr. Zian to look after the operations in India. Mr. Zian seeks your advice regarding the following matters of Giza Limited so that requirements are not violated, referring to the applicable provisions of Companies Act. So can I say this is nothing but from a chapter CIOI, that is company incorporated outside India. Can I say if there is a foreign company, this is a foreign company because it is registered outside India, CIOI is there, and it has started a branch in India, place of business in India, and it also have a as a business activity in India. So they satisfy all the condition. It's a foreign company. So being a foreign company, can I say you have to give lot of documents. So they are saying the advise him regarding the following: the registered office where all documents relating to company are required to be filed. To which ROC? I have already told you this when I was teaching you in the classroom, that several times they have asked this in exam, and they will confuse you. They will give you ROC of that state where the place of business is there, and then they will also tell you to that state or to New Delhi ROC. So you have to always remember, a foreign company has to file all the document to which ROC? New Delhi ROC. So where your place of business is located does not make any difference. Wherever it can be, you have to file where? You have to file at New Delhi ROC. I hope it is clear. Now, the mode of service of documents by ROC on a foreign company. The mode of service of document by the ROC on a foreign company. So where you have to give this notice? So in this you have to remember two things. First of all, you have to give it to person whose name has been given, to the company. To put it in simple language, we have remembered it in what way? Indian representative. So any person whose name has been given to the company for the service of notice, if you will give notice to that person, it will be deemed to be notice has been served. Number one. Number two, by which mode you can give? So you can give it by registered post, or you can send it by email. So these mode is also allowed, electronic mode or registered post, all these modes are allowed. So you can send that by that mode. So you have to write that. See, I am not writing all detailed answers and everything. All that is already there in your solution. What I am trying to say, I am just trying to tell you that how you have to think before answering, in what way you can interlink the provisions. The time period within which financial statement relating to each financial year required to be filed to the ROC. So if you remember, within how much time they have to do it? They have to do it within 6 months from the end of financial year. From the end of financial year, you have to file the financial statement, and ROC can grant extension of how much period? Extension of 3 months can be granted. So you have to remember this. You can just copy this, pause the video and copy this. Fine. We'll proceed now. Next point. What they are trying to say, requirement of filing other financial statement, if any. So which other, along with the financial statement relating to Indian business, in case government has not given any exemption. So which other financial statement? So can I say, along with standalone financial statement, you have to file copy of consolidated financial statement. Along with this, you have to file consolidated financial statement of parent entity. Of parent entity. What you have to file? You have to file copy of consolidated financial statement of parent entity. So that is, person to whom account pertaining to Indian business shall be required to be audited. Who will going to do the audit? I have already told you, practicing CA. whether he can be individual or practicing CA firm, practicing CA firm in India. So let's say I am a chartered accountant, fine, and let's say I am a practicing CA, so I can do the audit. KPMG is a practicing CA firm, so KPMG can do the audit. So just for the example, I have given you this example. So I hope it is clear to everybody. You can copy this video, pause it and copy this. Now I am moving on to the next question. I am trying to keep it compact, but I am trying to cover all points also. An order for investigation was issued by the central government against RSK Limited by virtue of a report submitted by the registrar of companies against the company. Since the company was not in good shape, the members being informed about the investigation order, so if you remember, passed a special resolution for voluntary winding up of the company. The inspector who has arrived for investigation was informed that the company is heading for voluntary winding up and therefore no investigation proceedings should be initiated. He did not listen to the plea of the company and decided to move ahead with the investigation process. One director of RSK Limited rushed to you and seeks your advice whether contention of inspector is tenable. If you remember, we have studied section 226. In this, what we have studied, let's say if investigation has been initiated, fine. If investigation has been initiated or you want to initiate investigation, or let's say if any matter related to section 241 operation is going on, or you have passed any order for winding up, whether it is voluntary winding up or by the winding up by the NCLT. So there are basically 2 points, B and C, voluntary winding up and winding up by NCLT. So will it affect the investigation, or whether investigation will affected because of these factors? So I told you it will not going to make any difference. Let's say if you are into a winding up, still investigation can be initiated, or let's say investigation is already there, is going on, still winding up can be initiated. So basically investigation will continue. Investigation will not going to make the fact that the company is in winding up, it will not going to make any difference and it will not going to make any impact on investigation. So what they are trying to say, one director of RSK Limited rushed to you and seeks your advice whether the contention of inspector is tenable. So answer is yes. The contention of inspector is tenable. The investigation will continue. Investigation will continue. Referring to and analyze the applicable provisions of the Companies Act 2013, advise the director, will your answer differ in case SR was not passed for voluntary winding up? Rather, an application was made by these many members before NCLT for relief after the order of investigation. Still the answer will be same. As I told you, any type of winding up, any type of operation mismanagement application can say will not going to affect the investigation process. So it will continue. So answer will still remain same. You can copy this, pause the video. Fine. Now I am moving on to the next question, question 19. So in question 19, what they have written, examine on the legal validity of the given situation in the light of relevant FEMA rules and regulations. Mr. A resident individual acquires a foreign security by way of inheritance from a person resident in India who is holding such securities. So can you say this is from a FEMA chapter and we have already studied this. What we have studied here, can say Mr. A. Mr. A is a person resident in India, PRI, and he want to acquire what? Securities, foreign securities he want to acquire, and he want to acquire foreign securities from PRI only, that too by way of inheritance. So can I say this is what we have already studied in the regulations, and there we have studied that a PRI can acquire a foreign security from PRI through inheritance. So this statement is a correct statement. So we have to say that this statement is a valid statement. Second point they have given, Mr. A was prohibited to acquire foreign security by way of gift from PROI. Now see, please understand, PRI can acquire, this is they are saying by way of gift, PRI can acquire from PROI foreign security by way of gift provided PROI has complied the Foreign Contribution Regulations Act. So can I say, now they have given you two situations. Situation one, what they are telling you? They are telling you that a PRI want to acquire foreign security from PRI by way of inheritance. So that is permitted. We have already studied that. Now the second situation, they are saying PRI want to acquire by way of gift from PROI, and they are saying that this is prohibited. The most important line is this, prohibited. Now can I say, they have asked us the statement is valid or invalid. Can I say PRI can acquire or cannot acquire? So answer is PRI can acquire. Answer is PRI can acquire from PROI. But only thing is that PROI has to comply the Foreign Contribution Regulations Act. In this situation, can I say they have used the word prohibited, so it is invalid statement. It is permitted provided you follow what? Provided you follow FCRA. I hope it is crystal clear, everybody. Shall we proceed? Now, question 20. Let us understand this. Mr. P managed to transfer his proceeds of crime abroad and converted the proceeds into immovable property in his wife's name with the help of his friend residing abroad. Explain with the reference of PMLA, will he succeed in escaping investigation property situated abroad not being subject to confiscation? Can say this will be hitting two sections, PMLA section 57 and section 60. What we have studied there, can say if any person has done some scheduled offences in India and he is having asset outside India, so can I say it can be done, but what you have to do, the investigation officer will make an application to special court. Special court will send the letter, means letter of request will be sent to a foreign country, that is contracting state we say. That contracting state will do what? They will provide the information, they will provide the documents which will be used for investigation, and they can also order for confiscation of the property. So can I say these all things will be done with this? So can he escape from investigation? Answer is no. He cannot escape from the investigation. Investigation will be conducted, but yes, it will be conducted by sending letter of request, and it will route through special court. So that is what you have to write in exam. See, I am not taking too much time. I am trying to put it just a crucial words which is helpful to you to connect with the what we have studied in classroom. Now, next point they are saying Wealth Bank Limited is a banking company which has recently incorporated. One of the director of the company rushed to you regarding the requirement of maintenance of certain records and certain information in terms of PMLA. If you remember, Wealth Bank Limited, it's a bank, means it's a reporting entity. What reporting entity has to do? Tell me. Reporting entity has to maintain the, this is what we have studied in section 12 of PMLA. Reporting entity has to maintain the records of transaction, number one, records of transaction. Then they have to provide this information to director within the time prescribed by the director, and then they have to also identify the client. They have to identify the client and business correspondent. So those 3 points you have to mention, and we have already studied records of transactions should be maintained for how much period? For 5 years. So that information you have to, those information you have to write in exam. Now moving on to the next question, question 21. Please understand, Bharat Sevak, a NGO which is a holder of certificate for receiving foreign contribution, has received foreign contribution amounting to rupees 80 lakhs during financial year for the purpose of providing health facility to the people residing in rural area for conducting survey in his regard. Out of the above amount, NGO has spent following amount as an administrative expense. What we have studied, whatever foreign contribution received, Can I say 20% of it you can do it without CG approval. Beyond that you need CG approval. Now in this situation 20% is 16 lakhs. So to put it in simple language, up to 16 lakhs, if there is an administrative expenditure, then that amount you can do it without CG approval. But if you want to spend more than 16 lakhs, then you need CG's approval. Now we will see all these things, whether the administrative expense is up to 16 lakhs or more. And by the way, they have also given you the list of administrative expenses. So you have to, I am not going to revise those things. I am presuming that you remember that. If not, then just go through those provisions and then you can come down and listen what I am telling you. Now, so referring to the applicable provisions of the Foreign Contribution Regulation Act 2010 and rules made thereunder, decide whether the following amount spent by the NGO is within the permissible limit. So now let us see for administrative expense. Now let us see. The first is of executive committee. We have studied that expenditure for executive committee is treated as an administrative expense. Then salary, wages, travelling expense incurred for the person engaged in training, collecting and analyzing data of rural areas. See the language, rural areas. So this is not administrative expense. Cost, electricity, water charges, telephone, internet charges, etc., etc., etc. of executive committee. Again, executive committee is an expense, is an administrative expense. Cost of accounting, this is not counting. Cost of accounting for the fund, again administrative expense. Salary of doctors, obviously not an administrative expense. So this 10 lakhs plus 6 lakhs plus 2 lakhs, that is 18 lakhs. Taken together, can I say this is administrative expense? Since administrative expense is more than 16 lakhs, can I say we need whose approval? We need CG approval for this 2 lakhs expense. See, 16 lakhs was permissible limit and you are spending administrative expense 18 lakhs. So means from the permissible limit you are spending more 2 lakhs, and that is the reason you need whose approval? You need CG's approval. Next question. XYZ Limited is a leading producer of a garments and has a good reputation in the market. A dispute has been arose between the management of XYZ Limited and its laborers related to basic facility at the workplace such as working hours, air conditioned environment, etc. The management of the company has sent a written invitation to the leader of labor union to conciliate on the issue raised by labor on 20th January 23. The union accepted the invitation in writing and management received the reply on 10th February 23. Examine the following situation as per provisions of Arbitration Act, whether the conciliation proceeding shall be commenced given. Please understand, this is related to section 62 of Conciliation Act. We know that whenever you make communication, so it shall be accepted or rejected within 30 days for conciliation. Now here invitation has been sent on 20th January 23, and they said that they have received reply. The first situation, they have received reply by 10th February 23. So it is done within 30 days. That means, can I say, they will say yes, it is commenced. What if the management received reply on 26th February? Can I say from this day, if you will see, it is more than 30 days. Now you have to receive reply within 30 days, it is more than 30 days. So it is not commenced. It will be treated as if it is rejected. So in here, in question 22, what you have to remember, only two things. Number one, can I say if you are receiving reply, you have to receive reply within how many days? You have to receive reply within 30 days. So in the question, in the first part, this is that letter has been sent on 20th January 23. So 30 days from that will be 20th Feb 23. So can I say you have, if the communication is done on 10th Feb 23, it is within 30 days, so it will be commenced. But in second situation, they are saying that they have received it on 26 February 23. So that means it is after 30 days. So it will be rejected. Next question 23. It is from IBC. An application completed in all respect was filed by an operational creditor before the NCLT for initiating CIRP against Shrimp Limited. The NCLT, after detailed examination of the application, admitted the application and accepted the proposal of operational creditor to appoint the person proposed in application as the IRP. So can say IRP got appointed. The operational creditor along with his application attached to the consent of IRP, referring to the provisions of IBC, advise the matters who will constitute COC. Who constitutes COC? Ideally it is the right of financial creditor. But wait. COC consists of financial creditor. Who will constitute COC? So IRP will constitute COC. You remember the chart I have explained you in classroom? Can say application will be made, then IRP will come into the picture, then IRP will collate the claim, like this everything. So and he will constitute COC. So who will constitute COC? IRP. Who will be there in COC? So financial creditor will be sitting in COC. The time limit within which the first meeting of COC will be held, within how many days? 7 days. From the constitutions of COC, within 7 days you have to conduct first meeting of COC. Then majority required for appointment of RP. Now in this situation there will be two things, please understand. Can I say there is, if you want to appoint IRP as RP, then IRP will be appointed by COC by passing 66% in value of resolution, and they will appoint IRP as RP. But let's say they don't want to appoint IRP as RP, then what will happen? Then see situation number 4. In a situation where it has been resolved to replace the IRP with another RP, what further steps are to be taken when it will be required to continue RP in spite of the fact that it has been replaced with another RP? So what they are saying, there are two possibilities. You want to appoint IRP as RP, 66% in value, you will get a point of COC, you will appoint IRP as RP. But let's say you don't want to continue with IRP. In that situation, what will happen? Can say you will give the new name after proposing 66% in value. You will give new name of IP to and this thing IBBI, and then they will to NCLT, and then NCLT will give it to IBBI. IBBI will tell within 10 days whether any disciplinary committee is disciplinary proceeding is pending or not, and after that, can I say after that person will get appointed as RP. Until the period you don't appoint a new RP, who will continue? IRP will continue. So I assume that the chart which I have given you in the classroom, you can recollect that. So all these things we have completed. Now last part I am going to discuss. Okay, now one MCQ is left, 9 it is. For this MCQ, there are several amendments, few amendments are there which I have covered in May 23 RTP. So those who have already attended my recent lecture, I have already covered that in classroom. But those who have studied long back from me, those amendment lecture also I want to see, and then I want you to attempt with this. What they are saying, Mr. Suraj is an editor of Daily Bird newspaper. One of his relative, Mr. Chan, who is residing abroad, remitting foreign contribution of around 1.5 lakhs for him for arrangement of medical camp. In what manner will you justify the remittance? The remittance shall be deemed as foreign contribution, need to be reported to CG. The remittance received from relative cannot be deemed as foreign contribution but need to be reported to CG. The remittance received from relative cannot be deemed as this, and being an editor. See, in this there is no numerical involved much. The answer is given B, but as I told you, purposely I have kept it in the last. I want you to view that amendments also, and then just attempt this FCRS MCQ. I hope I have tried to complete it in a as limited time as possible to save your time. I hope you find it useful. Thank you very much. God bless you and all the best for your exam.